Welcome to Edison TV. I'm Marvarine Cole, and today I'm joined by Nick Jefferies, the Chief Executive of Acal plc. Nick, thanks very much for joining me.
Pleasure.
First of all, tell me a little bit more about Acal and who you sell to.
Well, Acal is a specialist supplier of industrial electronic components. So that means we supply niche, highly technical, often customised electronic products and solutions to in a wide range of industrial manufacturing companies, whether it be that medical, transportation, renewable energy, and just general industrial. Our customers are typically design engineers. They are manufacturing and designing a specific product, and often, and the reason that they come to Acal is because they're looking for a particular, often customised solution for their application and their design. The market we operate in has been a long-term growth market over the last 20 years. The market for intermediate electronic products has grown by 12.5% compound annual growth rate compared to GDP over the same period that grew by about 3 to 4%. So we operate in a long-term growth market. We believe that those drivers and dynamics are unchanged and will continue for the future. So we believe that we operate in a good market. And within that, we have a highly differentiated value proposition, and we're the largest player at what we do. So we believe that we will continue to gain market share organically, as well as acquire complementary businesses.
So why do you think investors should choose Acal to be part of their portfolio?
Well, we think that we have a strong and differentiated market position. We think that it's a good long-term growth market, so we believe that we are growing market share in a market that we believe will continue to grow well ahead of GDP, and we believe that that will deliver long-term growth both with our organic performance and which will be further supplemented by acquisitions. So we think that we will grow ahead of economic indicators. That's particularly important at the moment because we're in a low-growth economy.
Acal's changed significantly over the last 4 years, so why is that, and what sort of impact has that had on company performance?
Prior to 2009, Acal was operating in multiple business areas. Some of them are what we now call class as non-core, and we were selling both a range of semi-specialist products as well as commoditized and non-specialist products. So over the last 4.5 years, we've disposed of 3 business units. And we've moved out of the commoditized area completely. 4 years ago, 50% of our sales were specialist. Now, 93% of our sales are specialist. So we believe that we've moved into an area of the market where we have a highly differentiated value proposition. We have very clear differentiators. We sell technically demanding products into industrial applications which often require customization to some degree. So we now believe that we have a highly technical and differentiated value proposition, and that's fundamentally the difference in our strategy compared with 5 years ago. In terms of performance, we've seen, including the acquisitions, a compound annual growth rate over that period of over 20%. Our gross margin has increased by over 4.5 percentage points, returning the group to profitability from what was loss-making. Our working capital is now at its most efficient, and our free cash flow for the last 2 years has been over 120% of operating profits. So we believe that we are on a good track to delivering better and improved sustainable financial performance, and that if we continue that, then we believe that we have a very good position ahead of us.
Acquisitions are clearly a part of your core strategy. So what sort of progress have you been making in terms of consolidating the market?
Yes, acquisitions are important. We operate in a highly fragmented market. There are many individual technology players. We're the largest player in that market, and so we believe that there is an ideal opportunity to consolidate and bring those businesses together under one larger player. Over the last 4.5 years, we've acquired 5 businesses at a spend of £30 million. So far, on the first 4 acquisitions, we've delivered a return on investment of 24%. Our 5th and most recent in April of this year is yet too early to measure. But certainly acquisitions are important, and they're an important supplement to organic performance. And it's the combination of the two that will drive performance in the future years that's ahead of the overall market.
You've just launched a new website, so what's the thinking behind this?
We developed a new website because we have a very wide range of products, so approximately 100,000 products, plus all the design and consulting services that we also offer. For us to reach our customer base, the design engineering base, we need to find ways to become visible when they're looking to solve a particular problem. So the objective of the web was to clearly portray the full range of products and services so that when our engineers are working and searching typically via the web, our products and company become visible. To do that, we have to structure the data on the products and the attributes of the product in a manner that is visible in the search engines, particularly Google, and that we've done. All of this is done with the objective of bringing us new customers. We currently trade with 25,000 customers, of which 11,500 are active in any 1 year. What we're aiming to do with this new web platform is to bring more active customers into the group at any time. Early results are encouraging. We found that already a high proportion of the new inquiries that we're receiving are for customers or contacts that we haven't previously known.
How do you feel about the broader market conditions right now, and what are your prospects for the current year?
We think the market has stabilised in Europe. It's clearly going to be a low growth environment for some time to come, but from our perspective, the trading in the second half saw an improvement over the first half, confirming our views that the market has stabilised. And further than that, we believe that some of the key economic data is supporting that. So we measure the manufacturing PMI data, for instance, which has shown some steady improvement over recent months. And additionally, M1 money supply in the Eurozone, which is said to be an indicator or lead indicator of industrial output, is also showing positive signs. So we believe that that underpins and perhaps explains some of the improvement that we're seeing in conditions. Additionally, the new year for us has started well. Our organic trading is up 7% in orders in April and May, and our recent acquisition of the Mirror Group is up by a similar amount. So we believe that that's further confirmation that the market is improving and that our business is showing some early signs of improvement. So we expect that should this trading continue, we're going to be in good shape for the year ahead.
Nick, thanks very much indeed for giving us your insight into Acal PLC.
Pleasure.